Number one question in the ICT space as a whole: which fair value gap do I use? Jack, there's a fair value gap here. There's one here. There's another one, blah, blah, blah. There's way too many fair value gaps. How do I know where price is going to manipulate into, where price is going to react off of? What are these specific fair value gaps I should be keeping an eye on? And well, that is a question you should definitely be asking yourself. There are a couple of scenarios where it really doesn't matter too much. And I'm going to show you exactly when to not care about which fair value gap. And most of this is just simply waiting for confirmation. Now, this is a question that I used to get caught up in myself, and I would just confuse myself and I'd take a lot of losing trades because I'd basically be guessing which fair value gap price is going to go into, or price is going to bounce off of. This is how to avoid that, and it's very simple. And I don't know how long this YouTube video is going to be because it's such a stupid simple concept. So we took a trade this morning, and I'm going to use that to show you guys exactly what I mean here. This was the long setup that we took right here. We wrote it to the high day, and we just caught a simple 1-to-1. I haven't traded at all this week. I waited until Thursday because of FOMC stuff, and we made a couple $1,000s today. Tons of people got payouts, past their accounts, etc. If you don't know, I trade live with over 200 people every single morning. So if you do want to trade live with me, just click the first link down below. I'm on pre-market, execution, trimming, everything. You can learn my strategy as well. So now down to it. Which fair value gap? Let's just completely clear off our charts and actually get started here. Also, there's the Apex code. I forgot to throw that on there for you guys. Anyways, first we need to understand the narrative behind this trade before deciding what fair value gaps we're looking at. So just looking at a top down from the trade we took today, everything's bullish, right? We had bullish FOMC. You can see on the daily, yesterday we absolutely ripped after getting that FOMC retracement. A toddler could probably tell you we are going to try and look for buys today. If you look on the 4-hour, the most recent CISD, or if you want to call it market structure shift, was bullish. Again, dropping to the hourly. The hourly was very bullish as well. As you can see, the candle before we wanted to take buys, we ended up respecting 2 hourly fair value gaps. Now, this is just me going over narrative. This is not about the trade here. Again, real quick, we did have, I don't know why it went to that time frame, but we did have an SMT with the Asia lows on ES as well, right? We swept out Asia lows on ES and saw a big reaction back to the upside, and NQ did not sweep out the Asia lows and saw a big reaction back to the upside. So overall bullish narrative. Again, you could probably be 3 weeks into learning ICT and could have seen it was a bullish day. So in this scenario, I am looking for my entry confirmation. Okay, I'm clearly looking for buys, and we see this big reaction back to the upside. Now, a common problem that I see is people will just assume, oh, I'm going to pick the first fair value gap here, and they will enter just blindly off of this first gap and keep their stop loss below the gap because they think it's going to react off the first one. And they're also like, oh, look at me. I got a 3 risk to reward on this trade. This should be perfect. And they're setting limit orders, right? The problem with picking the correct fair value gap is you guys are just setting limit orders blindly and not waiting for any confirmation, okay? In order for the market to truly be bullish, no matter what you see on the higher time frames, you need to see, firstly, bearish fair value gaps get disrespected, which we're seeing all of these get disrespected, and new bullish gaps that are formed be respected, okay? So in this scenario, right off the rip, we see an inverse, right? And if you would have taken this trade, just a limit order, you probably would have gotten cooked. Or, maybe you're emotional. You would have fucking been like, oh shit, we're actually continuing bearish to sweep lower. This doesn't look like a clear long yet, right? Yes, it doesn't look like a clear long, but we end up getting this discount, okay? Now, again, you guys are overcomplicating this, thinking you need to be a genius. In this scenario, guys, I'm gonna keep it real. I don't know which fair value gap we're going to tap into, okay? What you're doing as an experienced trader is reacting to what the market does, okay? I'm not trying to predict this. I'm not setting a limit order. I'm going to fill market once I get extra confirmation, okay? Now I can see we've tapped into the discounted gap. Okay, we're respecting this one, right? We are disrespecting bearish imbalance and respecting new bullish gaps. So that means the buyers have fully taken control. Sellers cannot fight hard enough to get the control back. So again, in this scenario, it doesn't fucking matter what gap it is. We just need to see one of these get respected. I don't care if we get into a discount or if we're still in a premium relative to this 1 minute leg. None of that matters. You just wait for a fair value gap to get respected, and then you wait for confirmation. In this scenario, change in the state of delivery. Okay, boom, you could have entered there. Now, that being said, with our entry model, my 10 a.m. PO3, it was a little premature. The timing wasn't correct. So what did I do? I just waited for an extra confirmation, a new fair value gap getting tapped into, just to make extra sure we weren't just sweeping this high and continuing lower. I waited for a fair value gap to get tapped into and another break to the upside. Boom, easy, long, okay? Long right there, caught a 1-to-1 to the highs. Now, as you can see, I'm probably going to make another video on this, but today was a textbook market maker model, sell side curve, buy side curve. We entered off of the reaccumulation leg here. So again, in the majority of scenarios, it's not going to really matter, especially on the low time frame, which fair value gap you're picking. Now, what does matter is a scenario like this. This is where a lot of you guys get confused, and hopefully you guys, hopefully most of you guys are still there and haven't clicked off the video just when you found out the first part, because this is the second part that's also important. So now, let's say you missed this move, or maybe you're looking for a re-entry. You have a ton of other fair value gaps. You have this one still, this one, right? Both of those are mitigated, so probably not going to look at those. This one, you have this one, this gap, and then you'll see we have a couple more. So this is where people get really confused and being like, Jack, I have no idea which fair value gap to pick. That's because you're not zooming out, okay? In a scenario like this, let's do a price range. 700 ticks, okay? The fact that we have ripped 700 ticks tells me anything over 500 to 600 ticks is really going to tell you, look, you're not looking for a 1 minute gap retracement. That's just not going to be the case. What you're most likely going to look for is going to be either a 15-minute gap or a 1 hour fair value gap. So, and that's relative to what the volume was before. In this scenario, I'm probably more likely looking for a 15-minute fair value gap, just because, we're still in a range, right? Let's say our range was a lot tighter volume and then we'd ripped 600 ticks and we're way above these highs. Then I'll probably wait for an hourly to rebalance because the volume is different relative to, what it was before the breakout. But because it's normal volume, we're probably looking for a 15-minute gap. And I actually did catch a re-entry today off of this on my individual account. But yeah, as you can see, we consolidate long enough to form a 15-minute gap. Okay, so it's all about patience in PO3, right? We accumulate, we then manipulate or rebalance into a 15-minute fair value gap, and then we see another pushback to the upside. So again, this is not, me just blind limit order entering off of this. I'm going to wait for extra confirmation. First, again, bearish PD array disrespected, new bullish PD array respected. And we see a manipulation into, I believe with this candle, into the 1 minute gap. And then another break back to the upside. So this is a ridiculously easy long re-entry right here. Boom, stop at that wick, target the high for a 1.2. Okay. So I guess the point of this video was more, how do you pick your fair value gap? I do go more into depth on specific fair value gaps, hourly, 15-minute, 4-hour. They do matter. You do need to study them a lot. But again, I'm trying to simplify this process for you guys so that you can understand it and realized that, hey, when I'm looking for a low time frame entry, it doesn't really matter which fair value gap it is. You know, you want it to be relatively close to price. One more note is if we had already gotten this break to the upside, I don't want to see like a random 15-minute fair value gap down here. We're already breaking to the upside. We already have an SMT. We don't want to invalidate any of our bullish confluences. So we'd like to see it stay within, you know, whatever the most recent kind of low time frame swing range is. But hopefully that was simple enough for you guys. Again, if you do want to watch me live trade, you can go ahead and do that at the first link down below. We're absolutely cooking. If you do want one-on-one mentorship to get you to over 10K in payouts a month with prop firms, you can also apply at the second link down below. But again, hopefully you guys enjoyed this. And yeah, I've been seeing a lot of positive comments that I've been opening eyes. So definitely going to post some more YouTube videos because, you know, I was in that spot once, just stuck watching random people overcomplicate shit. So hopefully this helps. Drop comments if you have questions.